Hey everybody, Economic Ninja here. I want to talk about a conversation I had the other day with an insider at Bank of America. Now, this person has been working for Bank of America for well over 20 years. Started well before the Great Recession even kicked off in 2005. And I want people to understand the seriousness of what this person is warning about. Now, this person has worked in mortgages for the majority of their tenure at Bank of America and has worked for, before Bank of America, a couple of very large lenders as well. So they have seen everything from robo loans to getting loans for your pets. So literally they've been around the entire block. But the warning they have right now is the shakeup that's happening at Bank of America, and it's very serious and very important. Why do we look at Bank of America? First off, it's the second largest bank in the country. They have been pioneers in so many different ways of getting customers attracted to their bank, to their institution, whether it be for loans or bank accounts. They have paved the way for so many other financial institutions, banks, to learn from how they attract business, right? They also do a lot of things that I disagree with, but that's neither here nor there. The point is that there's a lot of changes happening. So I'm going to start going through those for you, and I want to thank my insiders that find me, contact me. I obviously have to vet them before, and want to keep their information anonymous. But it is very telling of what's going on inside the bank. So first off, this person is part of a team of over 20 agents, 20 mortgage brokers. Normally, this person has about 8 to 12 loans going at any given time. Currently, three loans, okay? They are now no longer doing just mortgages. They have been told by their superiors that you are to do everything. You are to go and find new bank accounts. You are to go out and find new auto loans to give. You are now a one-stop shop. You are now on survival mode. As a matter of fact, they had a meeting where they were told, hey, we don't have quotas for you, right? And everybody sort of agrees, yeah, there's no such thing as quotas. We don't have to keep a certain standard to keep our job. And they were told in certain terms, well, you now have quotas. And if you do not go and get more business, we're going to have to look at alternative routes for you. Let's put it that way. And it was put into terms where they knew that they would be either written up or let go if they were not producing what the bank felt was a good enough quota, a good enough amount of business coming in. Now, this has never happened in the over 20 years that this person has been in the bank. Not only the loans dropping, they said they've seen this back in the recession, the Great Recession, but never, okay, you're now no longer just doing mortgages, you're doing all of these other types of loans, and if you don't bring in enough business, you're fired. One of the things I asked this person, I said, let's talk about refinances. How many refinances do you have? And they said, not that many. And I said, let's talk about the reasons. What are the reasons? He said the main reason right now for refinancing of homes, and we'll give an example of one of these, is divorce. A lot of people are getting divorced. And they said this is unlike 2008. Divorce in this country, the number one reason for divorce is financial reasons. And it would go without saying that right now would be a prime time for divorce. Families, finances have been rocked with all of this inflation, with interest rates going up, with scarcities and people that believe one way on COVID, one way on another. I mean, I've watched families be completely split to where they can't talk anymore because one says, no, this is the truth, and the other one says, no, this is the truth. Think about that. So especially when it comes to finances, the government gives you money. It's money in your pockets. One person in the family wants to spend it one way. One wants to save it or spend it another way. So they said divorce is high, and what's happening is the court's ordering, a splitting of the assets, or where one spouse wants to keep the house and the other doesn't, they have to refinance. And they said one person came through and went from a 3.5% mortgage to have to pay off, a gentleman had to pay his spouse half, had to refinance half of the costs of the divorce, including half the home, at 8%. They said that the person's payment went from around $800 to $1,500. That is crippling in so many instances. One of the other things that this person said that is happening right now is the turn down rate is quite high on everything from car loans, mortgages, to any type of loans. He said that one thing that is happening is the minorities are being hit the hardest because their credit scores are so destroyed from after the government stimulus came through, the way they spent, and not being able to keep up with those payments. I believe that in and of itself is predatory lending, because I see specific banks targeting minorities because their financial education level isn't the best. Now, with people like myself, whites, men, women, we have issues too. All of us have issues. But I believe that financial education is the one thing that is lacking in our school system. One of the biggest. The next thing is morality. But you can see where I'm going here. And that's why I love everyone that, when I meet people of different ethnic groups that get it, because you are the minority in the minority, right? When you understand finances and how to make money, that's exciting to me. But they said that their credit is destroyed because they're so late on loans. And one thing that they're having a hard time is just simply explaining to the people why they're being turned down. Now, when the person that reached out to me spoke with me, you could tell this sense, and they'd been following this channel for over a year and a half, and you could sense the, not desperation in their voice, but the seriousness. Because when you talk to somebody that's been in the industry, and please, anyone that's working for a bank, please put down in the comment section what you're seeing right now with loan defaults, with loan turndowns. When you've been in the business for over 20 years and you went through the Great Recession, and not just through it, you were part of the blow up part, the exciting part where everyone was making money, 2003, 2004, and then you turn around and you see what happened. Then when this cycle starts again, but this time it's different because it's worse, you start to really have a true deep appreciation for where we are in the cycle right now. And I want to hear more about, I want to find factoring experts, because a lot of bank employees have no idea what factoring is, and it is one of the darkest secrets in banking. And I want to find people that are in factoring in their bank, and I want you to reach out to me and let me know, because that's going to be the true telltale sign of where we are in this cycle. It is pretty impressive. But anyway, I wanted to share this with you because I think this is very serious. Bank of America is scrambling right now to get new accounts. They're the second largest, but I'm telling you, the mighty do fall. The big do fall. And in a world where we've seen behemoths like Enron collapse and go to nothing, total vaporware, it wouldn't surprise me if one of these big banks were the first ones to go for a bail-in, because that is what I'm expecting. And where there's smoke, there's fire. When you see the CEO running out every day and doing news stories like, hey, this 2% is going to crush us. Hey, China's going to crush us. And everything else is going to crush us except for our internal management and our policies and procedures, I tend to think that there's going to be issues. Thank you to my insiders every day. Thank you for the information you give me, and I appreciate it. And with that being said, the Economic Ninja is out.